Thanks so much for tuning into Talking Point. I'm your host, Neeraj, and the Talking Point today, the views of one of my favorite guests, Ajay Srivastava. He leads the high life, right, viewers? He travels to Lisbon, travels to UK, invests in crypto, and Bitcoin is at all-time highs. Must be investing in some other cryptos as well. God knows. So we'll ask him about that. But more importantly, ask him about how does he tactically position himself in the markets currently with the global markets positioned the way they are. Ajay, great having you. Thanks so much for joining
Thank you for all the kind comments. Thank you very much.
So, Ajay, should we start off with Bitcoin? I hear India has the largest number of crypto investors. So maybe people tuning in want to hear about Bitcoin as well, scaling new highs every day. What's your thought?
You know, the scary part for equities is now they got competition. All the marketplace said, where else will you invest? Now my son comes and says, Dad, equities is passe. So I think the bigger thing is that cryptos in India were put under a kind of a question mark, with government saying we'll take action, income tax saying you've done illegal transaction, we'll put you under FEMA and all. I think that's all over. I think the government has recognized that's over. So I think the legitimacy of the cryptos has now meant the fact that we are playing catch up at this point of time. Indian youth is playing catch up, Indian middle investors, and certainly the larger investors had zero exposure to crypto by and large. So I think it's going to be a great catch up story. But I think so that's one part which is going to play out. The second part going to play out is now equities got competition. So it's no more where else will you go, TINA factor and all those things. TINA is over, cryptos is in, and legitimacy across the world of cryptos is now coming in, including RBI saying we'll frame a policy, income tax saying we're going to frame a policy. So I think it's going to happen. It's going to happen at faster adoption, as always will happen with the younger set, which is already moved. I was telling another channel in the morning that now the huge youth base, which brought the equity rally into focus in the last 12 months into this country, has already moved to cryptos, and they will move in greater numbers at this point of time. And as Indian companies flounder now a little bit because of cost pressure, the revenue pressure, the volume pressure, the economy not growing, the TINA factor is not going to play out anymore. It's going to be more and more fact that we can grow. Like what's happening to the Indian investors, lots of money going to overseas US market, same is not going to here. So Indian equities have a challenge now of retaining their investors as compared to what it was in the last decade or two, that there was no choice. Now there are two big choices: global markets, crypto markets, and Indian equities. So three places to divide your money.
By the way, viewers, I'm sure Ajay Srivastava doesn't mean to say that Indian equities are bad per se. He's saying there's an alternative. It's no longer a TINA factor. Right, Ajay?
Absolutely. I'm not saying bad. See, nothing is bad or good. In the world, whatever makes money is good at the end of the day in our world. Okay. So the point remains that the comfort that there's no alternative to people. That's what I heard the narrative has been. That where would you put your money? I think there are choices, and the US investment has shown that the returns can be as good with top quality name, which you can't get in India. So therefore, I think our Indian companies also need to become more aware that they need to now, they're competing for capital also in a global space. So far, the comfort was the PE funds were coming in and FIs were coming in. But in the last 6-7 months, I think continuously FIs have sold in this country. The only thing they've done is flip IPOs, which has been a good profit-making venture for them. Interest remains very strong on the tech and the consumer side, no doubt about it. But if you've not noticed it, Neeraj, that the PE transactions have slowed down dramatically. You don't see any large PE transactions happening anymore in the country. Leave aside the startup space and etc. Mature company PEs, have you noticed, have distinctly slowed down because expectations of valuation of Indian promoters is now not matching with the PEs at this point of time. And also public space is so much better. So why give it to a PE when you can get IPO kind of at a stupid valuation? Not stupid, the wrong word perhaps, but whatever you want to call it. So I think those are going to be playing events out, and therefore become more challenge for equity selection and equity growth in the next 2 to 3 years time frame.
You sound bearish on equities. Is it my imagination? No.
I'm not bearish on equities. I think it's a challenge for almost 75% of the companies in this country today to grow their volumes among the cost pressure that they are in, on the premise that we also have an election cycles now starting to play out at this point of time, which means commodity prices, agriculture product prices need to remain elevated for some time. And the only saving grace is, I think, the petrol price reduction and the diesel price reduction. If that can gain more momentum, I think that's a great fill up. But that's the key trigger for India because, I don't think we realize it, but 90% of India, net of paying their school fees, petroleum cost, the transport cost, and house rent and EMI, don't have any major discretionary income. Okay, I said not much. Okay, so while there could be Mercedes can say we sold the largest number of luxury cars, or Ferrari can sell it, but that's not India. If 90% of India is not growing, 10% India can even double, but the Indian growth rate will remain 4 to 5%, and that's a struggle showing up in Dabur, Imamis, Hindustan Liver, Nestle. Everybody's results are kind of showing up that there is a pressure in terms of not able to pass the cost on to the market and retain the volumes.
Yeah, well said. So then let's talk about first a few pockets which are promising this high growth, Ajay, and wonder what your view is either on the story or on the valuations or a combination of both. Right? I'll take three pockets. First, real estate. Almost everybody is saying that this is a new cycle. For the last 10, 12 years, it's been stagnant. And there is evidence in terms of the volumes, at least thus far. Are you convinced of the story or are you skeptical?
See, I'm convinced of the story, except the simple fact which always holds me back from real estate in India has not been a great story for investors. It's been a great story for promoters. It's never been a great story for investors. So investors need to be very alert when to get in, when to get out. There is no long-term systemic story like a Nestle or a HDFC Bank which can say build up value over the period. And the fact that I'm not saying anything about the promoter, none of the promoters kind of give you that comfort that these are the companies. Maybe there are a few exceptions like Oberoi, Reality, etc. perhaps. But the fact that historically the track record has been of a little bit of a question mark in terms of passing on the benefit to the shareholders. Whether it's the largest companies in North India where I stay or the others, have not been a consistent growth stories for investors. And therefore, that gives me doubt that, yes, you can be a good trader to buy in and sell out. And you've seen that stock market rated quite substantially the stocks, but of last 3-4 months, they have been stagnating by and large. Maybe the next trigger will happen whenever it happens. And I'm not a believer in affordable theory because when you build a cheaper house, you don't make money. And anybody can tell you that. All the money is being made in luxury housing at this point of time. And you guys in Bombay are buying crazy prices, of course. Okay, 40 crores, 50 crores and 70 crores. That's where you make money. You don't make money by selling 12 lakh rupee houses, no matter how good it sounds politically and that, we are in affordable housing. But nobody makes money there, ask any developer. So I think the question mark for investors is that, is it the segment which will give you consistent growth over the period of 5 to 7 years and the returns to shareholders? That's the key important. You see the largest stock, for instance, Vedanta, running at a P of 2 and 3 only because of governance overhang. There's no other reason. It's got major profits, it's deleveraging, net of Hindustan Zinc is almost surplus in cash, is doing moving money from reserves to this thing. So possibly another big dividend is coming, has to come. And it's still the market cap is what? 1 lakh 10, 1 lakh 20, 1 lakh crores. That's it. For the company which supplies almost 75% of commodities to a nation like India, is unbelievable that the market cap is 1 lakh crore. That's what governance overhang does to your stock.
Yeah, and there are believers who say that this will change, but somehow, who knows? Nevertheless, Ajay, the other question is this fancy that the street has caught up with, which is the whole EV ecosystem that gets built and everything around it, be it auto companies themselves, maybe Tata Motors today, TVS is up 10% on the back of that, or even power companies which have gotten a fillip that suddenly, EVs are suddenly making people realize that the country needs power. It's almost like that. What's your sense?
See, what's happening in EV is it's not the fundamental alone what's driving. What's driving is that as more global funds get focused on the ESG component of their investment, a lot of investment dollars per force will have to come to these stocks. That's the real story out there. There's nobody expecting that EV is going to come up and make money, And after the comfort of Tesla, against all doubters, all everything, and you saw the kind of shots Tesla had one point of time, suddenly the market is saying there is merit. And the merit is not in the fundamental of EV. The merit is the fact that given the push of ESG, all the global funds, the sovereign fund, will per force have to allocate 20-30% of the money towards these stocks. And therefore, you'll find that the number of stocks are very limited. The demand will come into these stocks, and which is true, which is absolutely true, because that's what's going to happen. That's what is happening to the e-commerce stock. There's no reason for a Paytm or a Nykaa to be what they are today in the valuation, right? The only reason is because somebody's paying money for it. But at least, luckily, these companies have got assets on the ground. Say Tata Power will have some asset on the ground, or TVS, you named it. TVS has been a stellar performer by and large. Irrespective of the EV today, even the result of this quarter perhaps stand out to be one of the best results of any companies, not only in the two-wheeler space. So I think TVS has been a good, consistent story, but EV story is all about capital coming into the stock more than the stock itself. Now, everybody is going to buy, has to buy, global fund have to buy, FIs have to buy, all the funds have to buy it, Indian PF will have to buy the stocks. So if you're stock limited and everybody has to buy, you're in a good space. So I think EV is a good, safe space because a lot of more good money is going to come in to buy very expensive stocks.
Let's not get into names, but invariably people will realize. I'm trying to ask you a tactical question. There are believers, right? In the sense, Tata Motors management tells me that when we went to the chairman, N. Chandra, presumably, and presented him our E plan, chairman being chairman said, "Arey, make the dream 4x of what you have right now," right? TVS is now saying they are doing this. Some other companies are saying this. At the other end are some of the incumbent companies who are saying we are not getting into EVs right now. We'll wait for the time to come, etc. The largest four-wheeler company, the most fancy two-wheeler company at a point of time.
That's age. That's age.
So my question to you is this: from a stock market investor perspective, would it happen that the EV-rated companies get re-rated because of the interest that he spoke, and the non-believers get de-rated?
See, non-believer, if you're talking about Maruti, I call it age. Okay, it's very difficult to adapt to something new at that age. So I'm sorry to say that, but that's the fact of life. Then why do people want younger employees? Why do people want younger people? It's because they can adapt to new things in life. That's a fact of life. For someone today to say that EV is not going to be adopted for the biggest car company in the country, kind of strange comment is that. It's a very strange comment. Okay, you may not do it strategically because you don't have capability to do it. That's another way to put it. That they don't have capability at this point of time, and they want to, not put their money. They rather put the money in FD than put the money to work. That's the bottom line at the end of the day. But that doesn't change much to me. That's a kind of a personal comment. I think you can't fight this change. The EV is coming. It's already come. It's in a big way. It's coming. Tesla is being bought in a big way globally. Everybody is, whether it's Audi, whether it's Mercedes, everybody's getting into the game. And, so it's inevitable. It's like saying, I'm not going to use an air-conditioned car, when the Fiat used to be there. That's kind of strange. I think let's embrace it. I would say to say the fact that I will not get into EV because EV is not viable is not correct. To say it's not commercially viable for this company, perhaps that could be one of the reasons. But the fact remains that when the day comes or reckoning comes and Delhi with its pollution, which I'm seeing just now, it's like whatever it is, you can't breathe. And Delhi says no more IC engine cars to be registered. Then where will you go? Delhi is the largest market. And with this pollution, Delhi will be the first city to come and say no more petrol engine cars or diesel engine cars in the city or NCR. Then where will you go with your little cars of yours? So I think it's I think EV is a story. It's a future. It's the way the world is going to work. And whether it's hydrogen comes after that, we don't know, but that's the fact. And therefore, for investors also, it's important. I won't buy a stock where the chairman says EV is not my future. Therefore, your company is also not my future, my friend. Good luck.
Wow. Okay. So just this very small pocket, but what happens to this whole push by the government on ethanol? Because if ICE engines themselves are under question, then in some sense, so ethanol movement kind of gets usurped by the whole EV revolution, right? Or does it take time?
See, ethanol has a problem with environment, will tell you, is not because of the one which is IC engines, because trucks, tractors, etc. will not move to electric for a very long time. So there'll be a big demand for this thing. But environmentally, it is ruinous because sugarcane is the highest user of water in the world as any crop whatsoever. And by growing sugarcane and incentivizing in places like Maharashtra, etc., which are drought-prone areas and including UP, water table falling, it's an environmental disaster. That's one. Number two is they are viable if petrol and oil prices are above $60. Now, today they are viable because everything is up, oil is above $60. At below 60, you will have to end up subsidizing ethanol producers. So while all the sugar guys are going gung-ho into producing ethanol, when the day comes if the oil prices go below 60, what happens to those guys? Where will they make their money from? So I think, it's a good story, but it's got an environmental big issue around it, and the water consumption of sugarcane. It's got a big pricing issue as well. And therefore, and the EV push, as you rightly said, should scale up the demand down. It'll happen gradually. I don't think it'll happen in next year or 2 years. So in a shorter duration, sugar producers can make lots of tons of money. But I think they're only making tons of money because today they're not being made to pay the price of water. If you look at paper companies, other industrial companies, now they are paying a very steep price for water. The only industry which uses maximum water but does not pay for it is the sugar industry.
No, well, that's a telling point, and Ajay, thanks for bringing that up. I didn't know this, so I'm glad you brought that up. Couple of spaces, Ajay, where the balloon has deflated. I want to understand if you believe the balloon has been pricked or is it a temporary piece. And I think what happened in Q2 to specialty chemicals and to this whole API belief has been a rude awakening of sorts. My question is it temporary in nature because of the disruptions that could well happen, or do you believe that the story is kind of gotten halted in its tracks, so to say?
Okay. Specialty chemical is a good story. There's no doubt about it. But you don't, if the company is not growing, you don't start paying P's of 50 for it. Okay, and that's what has happened. Okay, so whether it's alkyl amines or whether it is other companies, etc., the P's became atrocious, absolutely. And on the flip side, there are also specialty companies which are still quoting at a P of 6 or 7. Okay, so I think it's both ways. I think it's just that, again, I said, it's a retail fancy. A name gets picked up, and suddenly everybody starts saying amine is a good thing. Now the guy doesn't know damn thing about what amine is used for. Is it a person? Is it a product? What it is? But amine to naam hai, so let's buy the stock. So I think specialty chemicals has gone in that manner, that it's become a flavor of the month, flavor of the period. People bought. The cost economics started to come into play because raw material cost has gone up, and therefore, if you see the margins are all flat or lower. That's the bottom line of all specialty companies. So nothing wrong in the investment. The balloon has not been pricked. They will have a very good growth rate, but it'll take a time for the volume to expand. You can't expand a chemical company like this. You have to set up a full plant around it. Therefore, in the next 2-year cycle, you'll again see it happening. But the fact that it's amine and let's buy it, I think that is what caused the misery in this market. But it's a good sector to be in, unlike API. See, API by definition means that you really don't have much competitive edge around it. It's a generic product. Can be made by a simple thing. It's outsourced by most pharma companies. And one of the things which has affected everybody has been the pricing of pharma has coming down. You see the competition in the US, you see all the Indian companies. So when you get less for your final product, you can pay less for your ingredients, right? But the chemical prices, unfortunately, have gone up. So API business got squeezed quite badly in terms of end product pricing coming down and the raw material cost getting pushed down. That's one. Number two was, of course, that the antivirals, they had a major demand for last 12 months. Now that's crashed dramatically. So whether you see the results of Laurus or you see the results of Gland, you see results of Glenmark, everybody will show a steep drop in India business because antiviral business has gone out almost. So what was a 100 crore business with almost 90% margin is becoming a zero business. And I think if COVID remains where it is today, they need to get out of this cycle and then grow it. But no investor ever buys API stocks in the world. Believe me, no one buys it. It's a trading stock. No one believes there's a growth story, value story out there. But on the other hand, specialty pharma works well, but pharma does work well once in 5 years. So investors should understand this. It's not a story which works every time. You've seen what happened to Syngene. It worked, and then 5 years, stock has slept completely. It just slept, Most pharma stocks also got re-rated and then gone to sleep altogether. So if you're a 5-year patient investor, I think pharma is a good story for you. Otherwise, the Indian guys have done a miserable job. They should all sell their companies to PE investors. Every shareholder will make money if the Indian promoters sell the company. The problem in Indian pharma is all promoters are holding on to the stock. Look at the disaster at Wockhardt. It's a complete, it's never made money for last how many years it's not made money, right? So whether it's that, whether it is Sun, whether it is Reddy's, I think if the Indian investors should be there, active investors say, you sell out to PE, they will treble, Indian investor will treble the money this company has sold and they run well. You can see what's happened to Sequent Scientific, JB Chemicals, etc. Gland, once they got sold, the real growth came into play. Till the old promoters were there, it was there, but you know what it was. And shareholders never made money. So all the shareholders, tell your promoters to go sell the company. You'll make lots of money in the stocks because there's huge PE interest in the stocks.
Got it. Okay. So Ajay, last two questions. One, I've asked you a lot of themes. Let me ask you now, which is the theme that excites you the most? I know you said crypto is great, but within equities.
See, infrastructure in India excites us more. Our largest investment is the port company infrastructure because it's also becoming like a monopoly status. So if you have a monopoly of a country's ports, you are on a gravy train because you can't substitute. You can't create ports. You can't do anything. It's a monopoly at the end of the day. So if India has to import or export, you have to go through you. Now, what better business can there be when every Indian export and import has 75% of it has to go through my company? Now, that's the kind of company, whether, we have all issues around it, but the fact remains it's a monopoly. So infrastructure companies with the monopoly status are definitely there at this point of time, which is one of the largest cases. The whole reopening of the market has, and this what the Delhi experiment has shown, that the liquor companies have come back in fashion. They will make tons of money. Again, a monopoly. There are only two, one beer, one liquor company, maybe one Indian liquor company. That's all. That's a listed space that we got. Other Pernod Record, etc., are not listed. So any marriage cannot start, at least North Indian marriage doesn't start without the bottle, right? So if marriages open up, that's a huge segment. And if Delhi has done what it's done, and every city follows what Delhi has done, these companies are sitting on 10x. That's it. There's nothing less than 10x multiple for investors if every city follows Delhi example, with them being forced to follow the Delhi policy on liquor. So I think liquor, monopoly ports is one thing. Commodity, as I said, I may not like the guy for governance overhang, but I have a large holding in that stock for the simple reason that it's cheap, it's given me good return, it gives me very good dividends, more to come. So I think I'm happy sitting on it and live with governance issues and not let him do what he wants. But still, it's a good stock to be. So I think commodity. The last sector we got is steel, because the steel re-rating is still not happened completely. Still, the companies are at a stock of 4 or 5. We bought into stainless last year, which has done phenomenally well. You'll amaze, stainless steel companies were quoting at one time of a P of 2. P of 2, and last year we said, what the hell? Okay, nobody likes it. I said, it doesn't matter. I like it. 2 of P is very good stock here at the end of the day. And everybody uses stainless steel in the house, right? Utensils are stainless steel and cars need it. And so what the hell? It's a good product. So I think steel re-rating is still to happen. People are still skeptical about it. But I think there is a multi-bagger story sitting there, because with the deleverage status, you will see a lot more attraction into the company. So I think commodities, steel, infrastructure, monopoly status, liquor industry, all put together, pretty viable, potent mixture for your investment and pretty safe as well. And the last point, people always ignored REITs. See the phenomenon of REIT. The performance of REIT has been absolutely stellar. And we have spoken about it before as well, number of times. And I think if you've not got 20% of your portfolio on REITs, I think you're missing the game altogether.
Yeah, and people are turning back to offices in some sense. So I think that rental numbers will start.
I wouldn't have been married if I had not gone to office, because I met my wife at my office. So for all the people who don't want to go to office, you don't know what good things you may miss out on.
And the last question: the markets at large, do they worry you? Do you time it, or are you fully invested?
We are fully invested at this point of time. There's no doubt. But as I said, 20% is in REITs. So therefore, I would not say stock market investment. But by and large, we are fully invested at this point of time in these stories at this point of time. I think 5-10% cash is what is there, maybe 10%, but nothing much. But it's a very focused stories. So the game can work either ways. But I think at the base price at what we have bought, we're pretty okay with it. So I don't think there is pessimism in my thing. I think you need to start reallocating stuff to sectors which should do well. And if you're an Indian economy, okay, just to clarify, 30% of our money is in overseas market, so that to extent is diversified. But I think we need to start taking cognizance of what's going to happen to these markets as the election cycle starts to play out. And that will have great ramifications for a lot of companies.
Most certainly. And maybe, we'll of course talk before that, but around that time, it'll be lovely to do that kind of conversation as well.
Perfect. Thank you so much.
Thank you for joining us today, and Happy New Year.
Thank you so much.
Thank you. Viewers, thanks for tuning in.